Good morning. It is August the 21st, and we saw headlines talking about how America will lose $700 million today in lost production because of the eclipse. So it's eclipse day. We've got clouds over us, so we may not be able to see it right here, but it's got everybody's attention. That's probably the story that'll dominate the news cycle today. We'll start with our disclaimer. Hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have over or undercompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. So there wasn't a lot of news out over the weekend. A woman was killed in Marseille, France. A car rammed into her. I have not seen if it's been attributed to terrorism or not, but that would be the first thought that would come to my mind. The manhunt is still on for the truck driver in Spain for their attack last week. The story out of the Far East were industrial metals led by buying in China, zinc, copper, etc. Were higher, and I think zinc was as high as it's been in 9 years. The news out of Russia is the United States will restrict or stop non-immigrant visas, which kills the business trade between them. Russia will respond in kind. And today we have the Chicago Fed's National Activity Index, which is expected at 0.22, which should not be a factor. So if the E-mini sells, and Friday we did not have a lot of participation by the 50-lot trader to the long side. Couldn't tell that they were really working the market as they did under the previous administration by buying every downtick. I think the Fed will let the market sell, but they'll prevent it, as they have previously, the bottom from falling out of it. So markets, everybody's saying the huge correction is due for the stock market. It's way overbought, yada yada yada. We've been hearing that probably for at least 2 years right now. So, but markets can move sideways and absorb the overbought state, the conditions that created that, waiting for a new increase round of earnings per share to take the market higher. So it doesn't necessarily have to sell. 70 points takes the E-mini to 2018. We haven't quite made it yet, so we'll see. We'll see if that actually happens. I like the long side of the market first. 19 to 23, buy 1. Buy 2, 13 to 17. Can sell failure to take out the buck. So the sell band right up here is 27 to 31. Last rotate up on Friday stopped at 31.5, so we'll make 31.03. Sell 1 with the idea that we're going to trade higher, and then 7 to 11, sell 2. If the E-mini rallies, it'll probably take treasuries down. The spread widened, the knob spread. Resistance is at 4 to 8. So 11 to 15, sell 1. Pick up this area right here. 19 to 23, sell 2. On the buy side, looks like it's 28 to the buck, number 1. So 21.25, buy 1. 9 to 13, buy 2. Yellen speaks this Friday at 10 a.m. Eastern. That's going to be the news focus as far as the markets are concerned. The market is still is split on an interest rate increase this year. They expect the taper, not necessarily the liquidation of the Fed's balance sheet with outright sales. They can do it just by letting the maturing securities, not replacing the maturing securities that they have, and they bought 3 years to 30 years when they did it, and they've got mortgage backs. So the taper, as they call it, right now, it's been hinted that it can start as soon as September. So they'll be looking for Yellen to firm those two up. So interest rates have been, you got both sides of the market there. The expectations for the taper to begin are September, as it stands right now. That's what the Fed has promised. And it is Monday morning. A lot of times we start out on Mondays without a lot to work with, and sometimes it takes an hour or two for the market to make up its mind which way it wants to go. Tuesdays, Wednesdays, and Thursdays are easier days to play than Mondays and Fridays. Okay, looking at gold. We had our 85.87 that we've liked probably 3 or 4 days of last week is a good place to buy, so we'll keep it at 85.87. I'll make it 86.88. And buy to 80 to 82. Okay, here's value or volume. We've made it to 93, so 94.96. We've got a P behind us. That's a very aggressive sell. 99 to 01 isn't. So we'd like to get short against 1300 if possible. But resistance is at 94 as it stands right now. Looking at the euro. Trying to trade up. I don't know. I'm not sure Draghi's even coming to Jackson Hole. When it started out about a month ago, Draghi was going to come to Jackson Hole and clarify everything about the European Central Bank's policies and when and if they would begin to taper their balance sheet, when they would raise interest rates. And then that was quickly denied and put to bed by the European Central Bank. So I'm not sure he's going to even be there. And if he wasn't there, it would do more to, letting the market, he's going to do anything and everything possible to keep the economy and everything going. But leave it at that, which is kind of where they like it. So we've got a seller. We've had a seller above 1790. We can see that. So we'll make 95 to 05, sell 1. 1825, sell 2. On the buy side, we're at 83. The low is 50. So 50 to 60 by 1, and then 25 by 2. And it may take a 75 to get long. I'll put a question mark at 75 right here. They do make you pay up early to get long in these markets these days. Okay, crude oil was hanging in there over the weekend. And Kevin supplied this chart right here on crude oil where the hedge is at 49 to 54. And you can see that right now 49 would be the bottom edge of that band. Now the hedger is different than the large institutional firms that have energy ETFs and option market makers. The option market maker and the ETFs, they have to button them up. They have to go delta neutral. They have to do what it does to make sure that their risk is minimized. A hedger is in a different category. So when we're making new lows and new prices going into the close, it's not necessarily the hedger that's selling, but it's for sure the ETFs and the option market makers. And there is some hedging that's done there from people that do not want to go out of business. So we'll have to keep that in mind. But right now, off of that chart, sellers at 49. And we're at 75. And we're trying to trade higher here. So 75 to 49, sell 1. 49 and a quarter, 49.50, sell 2. On the buy side, we broke it out from 48. We got a low right here at 50, so 48 and a quarter, 48.50 buy 1, and then 47.75, 48 buy 2. But the bottom end of that band, and that's why I showed you that chart where whoever that makes that chart thought that we would have or find some hedge selling from producers. Okay, will the ES break today or not? If we look at the structure, everything is pointed to lower prices. Doesn't mean it'll happen. Did not see a lot of participation to support the market by the large players on Friday. So my guess is that the sentiment is still to the sell side. Today's Chicago National Activity Index, that's a good indicator about whether the economy is growing or not, but it does not usually impact the market. So structurally right here you'd have a sell at 29.50, leaning against that number. The last rotate up on Friday stopped the market in this 34 to at their 37. So we had our first sell at 29.31, picking up this area right here, and our second sell was 34 to 36, picking up this area right there. On the buy side, 19 to 21, that's where support is. No magic there. And then I'm going to drop it down to 10 to 12. I think if we take out Friday's lows, Thursday's lows, that we're headed lower. Okay, the other thing that might impact the market today is more negative news about Trump, his staff, and if there's a piece of bad news out there on Trump, it's going to hit the wires. Gary Cohen, now that Bannon is gone, actually rallied the market a little bit. Gary Cohen the parts, we saw what it did to the market last week, so the market is subject to that type of news spike. And cannot trade without stops. Okay, it's going to take a bit to get everything up and posted. I'm going to get busy on that. I'll be back with you as soon as possible.